Hi, I'm Chad Schwendeman, broker owner of Exit Lakes Realty Premier and the Chad Schwendeman Real Estate Group, and welcome to my video blog. Today we're going to discuss the positive things happening with Fannie Mae in reference to student loans. Fannie Mae, the nation's largest underwriter for mortgages, has introduced 3 new rules that affect those that have student loans or those that have co-signed for student loans. Those rules can make it easier for you to get a mortgage and make it easier to pay off your student loans. Here's more detail on all 3 recent changes. For those on an income-based repayment plan on their student loans, the number one reason why they don't get approved is because of a high debt-to-income ratio. Previously, how Fannie Mae had calculated the debt was 1% of the outstanding balance. And for those that have huge student loans, that's pretty substantial. Fannie Mae has now made the change where they're going to calculate it at your monthly payment, which is typically so much less than the 1% that's owed. So now your income to debt ratio is hopefully going to decrease, which will enable you to meet the criteria to get a mortgage to purchase a home. Number 2 is, in the case of third-party student debt payments, some folks are lucky enough to have their parents or the employers pay off their student loans. The trouble in the past has been Fannie Mae still counted that as debt against your debt-to-income ratio. Well, that's going to change. So now if you can prove that your parents or your employer has paid your student debt for the last 12 months, this will no longer be calculated in your debt-to-income ratio. Obviously, this is going to make it much easier for you to be approved for a mortgage. And with today's low interest rates, the timing could not be better to purchase a home. The market is very robust, and we're seeing inventory fly off the shelves. In many cases, it's much cheaper to buy than it is to rent. A third way to get rid of student debt is to refinance your current home and take that money and use it to pay off your student loans. Normally, there's a 0.25% fee that applies to any cash you take out in this way. Well, the third big change is Fannie Mae is now eliminating this fee provided you use the cash to pay off your student loan. This applies whether the loan is yours or you're a co-signer. It's important to point out there's often benefits to education loans which you won't get with a mortgage, such as deferment or income-driven repayment plans. However, the mortgage rate is significantly lower than the student loan rate. So it makes sense to refinance this way if you're going to save 1 or 2 or even 3 percentage points. These 3 new rules from Fannie Mae can be a big money saver for the right person. If you need help understanding these guidelines to see whether they're right for you or any questions about putting them in place, please don't hesitate to call me direct at 218-831-4663 or email me anytime at chad@chadsteam.com. Thank you for watching my video blog and have a wonderful day.